Is the Hdfc Life Sampoorn Nivesh Plus plan truly a complete investment or just another ULIP with a fancy name? Let us find out through an in-depth analysis in this video. Hi there, welcome back to holisticinvestment.in, where we help individual investors like you to make the right financial and investment decision to reach your financial goals in a more faster and smarter way. Now, before analyzing this policy, let us first understand a few basic details about it. So this is a unit-linked, non-participating individual life insurance savings plan. Some of the key features of the policy are: you get to choose an investment duration that aligns with your financial goals. You can opt for single pay, limited pay, or regular pay based on your convenience, and you get to select from 5 different benefit structures tailored to your financial needs, and you also get to enhance your protection with the extra life option under the classic benefit, and you also can boost your fund value with loyalty addition starting from the 10th policy year, and you can enjoy reduced premium allocation charges when you invest a larger amount, and you get to access a wide range of 11 fund options to suit your risk appetite and investment strategy. So these are some of the key features of the policy, and there are benefits like death benefit, maturity benefit, and loyalty additions which will differ based on the plan option you have opted for. But still, as a ULIP policy, there are various charges that will be deducted from your premium, like premium allocation charges, policy administration charges, fund management charge, mortality and other risk benefit charges, discontinuance charges, partial withdrawal, switching, miscellaneous charges, premium redirection. So all these charges will be deducted from your premium before investing into the selected fund option you have or into the investment strategy you have opted for. So the thing is, all these charges under this plan are applied throughout the policy term, which reduces the investable amount and in turn impacts the overall returns over time. So in comparison, several other market linked products come with lower or no such charges, making them potentially more efficient for long term wealth creation. Now let us take a look at the advantages. So here you can enjoy up to 4 free premium redirections and fund switches each policy year, and you can make lump sum partial withdrawals after 5 policy years provided the life assured is at least 18 years old, and you can add to your investment through top up premiums as per your financial capacity, and you can withdraw a fixed amount at regular intervals with the SWP facility, and you can opt for a structured payout on maturity or death through the settlement option. So these are some of the advantages. However, the disadvantages are you can surrender and partial withdrawals are allowed only after completing 5 policy years, and this policy does not offer any loan provisions against the fund value, and your premiums are invested only after deducting applicable charges, which reduces the actual amount allocated to the end. So these are some drawbacks that you need to consider before deciding to invest in this policy. So now, if you want to know more about in detail certain aspects of the policy, you can refer the policy brochure. So now, as we have a basic idea about this policy, let us now move on to the analysis part of the video. So here, to help us make more informed decisions, we are going to analyze the internal rate of return of this policy by calculating the IRR based on the benefit illustration given in the policy brochure. So for calculation purpose, let us assume that a 30-year-old male has invested 1 lakh per annum for 10 years with a sum assured of 20 lakhs. The policy term is 40 years, so he has chosen the classic benefit option. The projected maturity values are based on assumed annual return rates of 4% and 8% as per IRDAI guidelines. These are not guaranteed returns and are neither indicative of minimum nor maximum outcomes. So actual returns may vary based on market performance and other factors. So at 4% return, the projected maturity value is 18.12 lakhs, resulting in an IRR of just 1.69% as per the policy's maturity calculator. So at 8% return, the projected maturity value is 87.13 lakhs with an IRR of 6.24% as per the policy's maturity calculator. So despite being a market linked product, the returns returns are modest, often comparable to or even lower than those of traditional fixed income instruments. This underperformance does not justify the higher investment risk borne by the policyholder. While this policy promises market participation and long term savings, its actual return potential appears to be inadequate for meeting significant long term goals. So, as this policy is not giving us a desirable outcome that we need, let us now consider the same premium structure used in the benefit illustration, 1 lakh per annum for 10 years, but instead of investing in the ULIP, we are going to split this amount between insurance and investment in this comparative analysis. So here we have taken up a pure term insurance policy for life cover purpose, offering 20 lakhs of life cover cost approximately 24,000 rupees as a premium annually for a 10-year premium payment period. So here the remaining 76,000 each year is going to be invested independently based on the investor's risk appetite. So here we are going to assume we have invested in equity mutual fund. So if you're a low risk option, like if you want something a low risk option, you can opt for public provident fund. So over 40 years, the 76,000 annual investment in PPF grows to 88.41 lakhs, yielding an IRR of 6.29%, which is completely tax free. But if you do want a high risk option, you can assume to invest it in a equity mutual fund, where you are going to assume an average 12% pre-tax return and factor in long-term capital gains tax. So the post-tax corpus amounts to 3.92 crores with an IRR of 10.76%. So here, if you have any doubts regarding how we have calculated tax for this, you can definitely see a tabular column presented on the screen for your reference, which you can pause and see. Both scenarios outperform this policy, which deliver an IRR of just 1.69% at 4% return and 6.24% at 8% return, despite being a market linked and actively managed fund. So separating life cover and investment proves to be significantly worth rewarding. So what is the final verdict then? Is investing in the Hdfc Life Sampoorn Nivesh plan worth it or not? So this policy provides you with flexibility in selecting death benefit options and offers you with a wide choice of 11 market linked funds. Depending on your financial needs and market outlook, you can choose a suitable plan variant and switch between funds accordingly. However, a closer analysis of the internal rate of return IRR reveals that the plan does not deliver inflation beating returns. So for long term investors aiming to build a sizable corpus, this plan may fall short of expectations. Like other ULIPs, this policy is marketed as offering the dual advantage of life insurance and investment growth. In practice, however, several charges, including mortality charges, policy administration fees, premium allocation charges, and fund management fees are deducted from your premium. Only the balance amount is invested, which ultimately reduces the fund value at maturity, and it also has a high agent commission. It is always advisable to avoid combining insurance and investment in a single product. Keeping them separate not only offers better returns but also greater flexibility. So the smarter approach would be to opt for a pure term insurance plan to secure your life cover, build a diversified investment portfolio aligned with your goals and risk profile.
If you want to read more about this policy, then you can definitely check out the blog post we have posted on our website through the link in the description. And if you want to gain more professional guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insights through the leading experts in the finance industry, we also conduct regularly free live webinars through which you can register and gain these insights. The link is in the description. Also, if you like this video, definitely hit like and subscribe to our YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.